Now, what in the world do we mean by tax brackets, and why would someone with $250,000 or more in retirement accounts need to be aware of what will happen in 2025 when the current rates expire? Well, let's do this. Let's take a look. Now, this is going to get a little complicated, but you really got to stay with me on this. This is really important stuff. So these are the current rates for the Tax Cuts and Jobs Act, which will expire in 2025. So let's start there. What this means is, and we're assuming a married couple filing jointly, that if that couple makes over $0, this is taxable income, between $0 and $19,000 a year, that portion is going to be taxed at 10%. You with me so far? So let's just say you were living on Social Security. Much of that wouldn't be taxed if you had minimal income from other sources. I've seen this happen. You would only be taxed at 10%. Not bad. Well, how does that compare to 2017? Well, if you'll notice, no changes. If you're between $0 and $19,000 a year of earned income in retirement, you're only in a 10% federal tax bracket. No big deal. Okay, let's keep going though. Let's say you make more money than that, so you go to the next level. By the way, tax brackets, people get confused on this. The level of income right here will never change. That's taxed at 10%. This is why we call it tax bracket creep. Watch what happens here. So let's say somebody's taxable income is $40,000 or whatever. That next portion of money goes in anything over $19,000 up to $77,000. Now that percentage of income is taxed at 12%. It's a 2% increase. You see what's going on here? We say, that's still pretty low, isn't it, Tony? Yeah, it's really low. But look what happens. If these tax laws, when they expire, go back to 2017, notice that it's a 15% rate. That's a 5% hike on that additional money, not 2% hike, okay? This is going to add up, as we'll see maybe possibly later on if we have time. Let's go to the next level. Let's say you say, well, I make more than $77,000. What happens if I make more than $77,000? You go up into this bracket currently, and these are the ones that are going to expire in 2025. That portion is taxed as 22%. Now, that's a 10% jump. Now we're getting up there. That's some serious change, all right? 22% on that portion. But what if these laws expire and they go back to 2017? Look at that. The jump is going from 15 to 25. Now we're starting to add some additional layers of tax dollars that are going to be due to Uncle Sam that we don't have to worry about now. These are starting to get to be some big numbers. We're going to see an example possibly in the next show of somebody who wanted to take out a large amount of money from their 401k to consider paying off their home. Okay, this is where this would come in. What if somebody is making more than $165,000 a year? What tax bracket do they creep into? Well, in this case, under the current laws, doesn't go up a lot. It goes from 22% to 24%, which again, that seems like a lot, but historically speaking, in fact, Aaron, put this up full screen. Remember, folks, back years ago, taxes got as high as 80 and 90% years ago. So are we going to get that high? I don't know, but if you compare 22 and 24 to 70, 80, and 90%, this is why I say we are at historic lows. So again, tax laws are going to expire. Let's say they go back to pre-2017. Now that portion of money is taxed at 28%. So we have 10, 15, 25, 28. That's the old law it could go back to versus 10, 12, 22, 24.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.